Based on available indicators, the Bahamian economy continued to expand over the first 9 months of 2025, although the pace was slower than in 2024. Tourism inflows continue to be the main driver of growth, alongside sustained foreign investment targeting cruise attractions and residential and resort developments. Nevertheless, constrained hotel sector capacity and weakness in the U.S. visitor market generated a subdued stopover performance, in contrast to a healthy expansion in cruise earnings. The economy also experienced stronger demand stimulus from private sector credit amid more favorable lending conditions, which consequently slowed the pace of accumulation in foreign reserves and bank liquidity. Overall, the environment stayed supportive of employment gains and further reductions in the government's net borrowing requirements. However, while inflation was mild, the potential persisted for near to medium-term acceleration if external developments make imports costlier. Regarding tourism, the latest available data from the Ministry of Tourism, combined with other indicators, suggest that through the first 9 months of the year, overall earnings increased at a slower rate than in 2024. This softening was largely concentrated in reduced consumer confidence and stopover demand originating from the United States, which eclipsed a significant boost in non-US demand, particularly from Canada. Despite continued robust gains in cruise inflows, projected stopover earnings were almost unchanged from the previous year. In particular, estimated hotel room revenues decreased over the comparative periods, in contrast to a healthy earnings growth for vacation rentals. While hotels registered slightly lower average occupancy and some reduced average pricing, vacation rentals experienced strengthening in both indicators based on the central bank's analysis of AirDNA data, which tracks vacation rental activities. On a positive note, for the remainder of 2025, the central bank's assessment, which also tracks online bookings and pricing for the entire resort sector, projects some uptick in the final quarter's performance for the resort sector compared to 2024. The combination of tourism and foreign investment inflows continue to support healthy foreign exchange market conditions. In the first 9 months of 2025, commercial banks' total purchases of foreign currency from the private sector grew by 2% to about $5.8 billion. And keeping close pace with local demand, the foreign exchange which banks sold to the private sector, mostly for imports of goods and services, also strengthened by about 2% to about $5.5 billion in the same period. And as a result, commercial banks were largely able to maintain the same volume of net sales of foreign exchange to the central bank. However, the central bank's transactions with the public sector switched to a net overall sale of foreign currency during this period, following a net purchase of foreign exchange from the public sector in 2024, which consequently led to a smaller net boost in external reserves over the first 3 quarters of the year. At the beginning of November, external reserve balances stood at about $2.9 billion, which is almost $290 million higher than at the start of 2025, and about $230 million more than at the same point in 2024. That is a comparison with the very beginning of November of 2024. On a seasonal basis, the central bank anticipates some reduction in these balances over the remainder of the year, which is consistent with stronger credit growth, elevated imports during the holiday season, and operations outside of the peak occupancy season for stopover tourists. As to credit, commercial banks lending to the private sector strengthened year over year by almost 7% through September 2025, and this compared to growth of about 4% over the same period a year ago, which was still a substantial uptick from the subdued pace of lending both up to and during the period of the pandemic. Across the major credit categories, the most accelerated category of lending was for commercial activity, correlated with financing of local energy sector investments, There was also a slightly faster pace of growth in consumer loans, but a slower rate of growth overall in residential mortgages. Compared to 2024, the lending risk implied from the delinquency rate in the credit market also remains slightly lower, with an average of less than 6% of all local currency loans being 3 or more months behind in payments. Indications are that banks are indeed making consistent use of the credit bureau to guide their lending decisions. They are processing a higher volume of loan applications, and they are rejecting a smaller share of these applications, especially for consumers. But in contrast to the consumer credit experience, the approval rates for mortgages was almost unchanged compared to the previous year in the latest lending condition surveys, which the central bank is also releasing today. And in the mortgage sector, there were significantly fewer applications being processed. Turning to inflation, the annual rate was negative in the most recent data for the first half of 2025, which means that there was a slight decrease in average prices compared to the same period last year. This resulted from both lower energy costs in the local sector and a lull in price increases on imported goods and services up to the first half of 2025. However, the ongoing tariff policy adjustments in the US could increase the imported inflation in the Bahamas in the near to medium term. There is still uncertainty, though, over where the final tariff structure would settle, and therefore the eventual cost that would be experienced by consumers based on pass-through from US prices. As to the rest of the outlook, the Bahamian economy is still expected to grow slightly above its medium-term potential in 2025, this year, and 2026, dominated by tourism and investment activities. As it relates to tourism, the cruise market should remain bolstered by increased capacity at private destinations. However, there's less clarity for stopover results, which are expected to be influenced by the extent to which potential gains in non-US markets combined with expanded airlift capacity offset any softer demand from the dominant US visitor market segment. Aside from trade policies, the downside risk to the global economy, which would also impact the Bahamas, persists because of the geopolitical tensions in Eastern Europe and concerns over if there are any concerns regarding the durability of peace efforts in the Middle East. However, the continued easing in monetary policy in the US and other major economies provides an upside potential for travel demand. This easing in monetary policy or interest rates would also support more favorable financing conditions for foreign investments and potentially greater savings on the cost of the public sector's foreign currency debt. Given the healthy foreign exchange markets and the banking system's ability to sustain reductions in liquidity and external reserves, the central bank will maintain an accommodating stance for credit growth. The environment has also continued capacity to absorb a greater share of the government's debt financing operations without posing any concern to the external reserves adequacy or the support for the Bahamian dollar fixed exchange rate. In this environment, the central bank, therefore, will only adjust its policies as necessary to ensure that the outlook remains sustainable, both for the domestic currency and for the stability of the domestic financial system. Thank you. So we will now entertain questions from you.
Governor, good morning. Bertrand Martinez. With the passing of the storm, Hurricane Melissa kind of impacted the southern islands. Do we foresee this having any impact on the projections in the upcoming quarter, considering I know most times government have to expend a lot of money, granted the damage wasn't as bad, but to help those islands recover and get back to where they were ahead of the storm?
Well, with the passing of the storm impacting the southern Bahamas, we do anticipate that there will be, some impact on the fiscal and on economic activity in those areas, but we don't think we're at the level where it will alter significantly the economic performance in the last quarter of the year.
Governor, can you give, Karen Carey from ZNS, can you give us an update on the digital wallets initiative, the transition to faster payments? How is that going?
Okay, so there are two initiatives ongoing. One, the central bank is continuing to work in terms of outreach to promote digital payments adoption, including Sand Dollar, and that's outreach that is happening, particularly in terms of how we impact what's going on in the Family Island. We see that as a continuous process, but we see it as being especially complemented by our new initiative, which is pushing more generally for the Bahamas to move in the direction of fast payments, which basically extends the digital payment experience more widely in the population and to all of the users of the banking system, in addition to those who are currently only using the digital wallets. And so we did put out on the weekend a request for proposal so that we can see what suitable technology providers out there exist that can provide that, help us build and deliver that technology. So a fast payment system would mean that you would have instant or real-time settlement of payments, whether it's at the cash register or peer-to-peer. Presently, the experience is instant if you have a digital wallet that operates within the connection to the Sand Dollar ecosystem. But if you're making transfers through the banking system where you're using the ACH to complete those transfers, there could be a delay, even though, on average, those payments tend to reach their destinations the same day. But that's still not real time.
I guess about the RFP, why is Central Bank putting this out to this fast payment system out to tender now? And outside of getting faster payments, what more benefits can consumers and businesses look forward to from this?
Well, the efficiency of payments is very important, but the Bahamas also needs to continue to modernize its payment system to stay even with the rest of the world. And when we think about the speed of payments, you have to be mindful that in the commercial space, businesses should expect to be impacted by how payment terms change in terms of their international counterparties and the way they make payments. Fast payments also position the Bahamas such that as the international move is also towards instant payments across borders. That would only be achieved for the Bahamas, is when funds reach the Bahamas, they can also complete the journey instantly. And so the Bahamian infrastructure needs that upgrade in order to stay abreast with the direction that we're headed. And we have to be mindful that if you are a tourist economy, the average visitor is already largely making payments digitally. And having the emphasis on those sorts of improvements is really to put that emphasis as well in terms of making certain that anyone who is providing goods and services to the visitor sector, they're also equipped to receive payments digitally and in real time if that's what's going on.
Yeah. Is this expected to increase or speed up the Sand Dollar adaptation?
It integrates the Sand Dollar more seamlessly into the system, and it allows us to use the Sand Dollar when it is needed more so to help provide the backup support for payments. Because a part of this push as well is recognizing that in the case of natural disasters and setbacks, you also have to be mindful of how quickly you can restore people's ability to make payments. And part of the experience in natural disasters is that it does take a while often to get the cash networks back up. But the wireless infrastructure that supports digital payments, we're continuing to look at how that plans around those sort of contingencies could be strengthened so that you can enable communities and small hubs to function and recover more speedily after setbacks.
So in your presentation, you mentioned that the economy is still expected to grow slightly above its medium-term potential in this year and next year, mainly because of tourism and other investments. So can you say what the projected GDP
We-
growth rate would be for the full year, and what impact does, I guess you would say, slower than normal tourism
The-
have on it?
The long-term potential growth rate for the Bahamas is below 2%, I think. Maybe 1.5 or slightly above 1.5%. This year, 2025 and 2026, it is expected that growth will still be, closer to 2% and potentially slightly above 2%, depending on the estimates that you look at. So it points to at least there still being some incremental above average level of robustness in terms of the activities that are ongoing that will benefit. And some of that activity really is the kinds of investment that we continue to see going into the cruise destination developments, as well as ongoing investments in residential real estate developments.
What would you say at this point are the biggest, I guess, risks to us meeting that growth rate? Or what would be the greatest risk we have to stilling the growth in our economy right now?
Well, because the Bahamas is tourism dependent, the risk always tend to come back to the kinds of developments globally that could impact the demand for tourism. And for the Bahamas, one of the risks that we manage now is how much capacity, say for example, we can attract as a jurisdiction to bring tourists in from non-U.S. Destinations. So the demand is there, and so therefore being able to attract more of those. The travel sector is always vulnerable to global economic trends, and therefore to the extent that the global economy can evolve and navigate, continue to navigate the sort of challenges and shocks that are ahead of it, whether any increase setback, that's important. So understanding that any unforeseen shocks to the global economy could impact globally consumer confidence and travel demand, we need to be mindful of that. And the Bahamas also has to continue to be mindful of how resilient it is in terms of being able to recover if it encounters severe hurricanes. Traditionally, we've experienced quite a number of hurricanes that have occurred during the slower months of the visitor season, and the Bahamas has typically demonstrated that in transitioning back to the peak winter season the following year, that the resorts have done a really good job of getting back into operation. So understanding the agility of the sector in recovering from those sort of setbacks is very important in terms of anticipating the types of risk or downside risk that we face.
Right, and you mentioned that there is, uptick in resorts for the fourth quarter. Can you say if that follows through into the first quarter of 2026 as well?
I will have to get back to you on whether it carried into the first quarter of 2024. But bear in mind, when we look at how we're performing in each of those periods, is comparing like seasons against like seasons. So this is a comparison of the performance that is usually in the final, 3-4 months of the year, which is not the peak of our tourist season, but it is still pointing to pricing and room sales that look stronger than in that same period of 2024.
Can you give us an update on some of the regulatory reforms that work on the credit union bill?
Well, the central bank would have had a series of reform proposals out for public consultation over the course of October, and the public consultation period for those pieces of legislative proposals would have just ended. They focus on, strengthening the way we regulate and supervise credit unions, as well as putting in place, stronger safeguards for how we manage the depositor protection framework, or sometimes we refer to the crisis management framework for the Bahamas. And a part of that is really making certain that we work out in advance all of the backup funding support that the Deposit Insurance Corporation might need in the event of having to make a payout. So that was one of the very important aspects of the reform. And there's also a focus on putting a more comprehensive look on how the central bank approaches its supervision and intervention across whether it's banks, credit unions, money services firms and the like, that we sort of centralize in the legislation a lot more the enforcement framework for those entities. The other important reforms relate to putting a bit more clarity around how the central bank is empowered to look at the consumer financial protection and financial inclusion issues. So those will impact the sort of authority that the central bank gets under the Payment System Act. And there are also proposed amendments under the payment system framework that would combine the way we license and look at money transmission businesses and payment services institutions, which for all intents and purposes are doing the same type of activity, but it's just an historical difference in terms of the timing of when those entities started to be licensed in the Bahamas, such that they are under two pieces of legislation.
When you talk about their enforcement regime, what would that look like?
Well, the enforcement regime allows the central bank, in those rare cases when it needs to also impose monetary penalties and fines on financial institutions, whether it has to do with the timeliness or the quality of their reporting or other aspects of how they comply with the rules and regulations that the central bank administer. Part of that focus, other than bringing everything under one umbrella, is to recognize that our financial institutions are of varying sizes, so there needs to be proportionality in terms of the scale at which you may apply fines and penalties. So even if it is considered to be a severe infraction, that looks different when you identify what the fine should be for a bank versus a credit union or a small money transmission firm. So those sort of principles come across in the way the proposals are structured.
The Deputy Prime Minister foreshadowed earlier, a few months ago, that there would be a slowing in travel based on some of the things that you've already mentioned in terms of the situation with the U.S. and tariffs. Did we see that play a role at all in this last quarter?
We did see that. If you look at in terms of whether there has or the kind of slowing that we would have seen in the sector, we have seen it in the summary numbers for air arrivals, as well as the departures through the Nassau Airport, which are just a majority component of the air visitors. And what drives those numbers overall is that the U.S. visitor component has decreased relative to 2024, but the non-U.S. visitors in the air totals has grown, and so you see the sort of the offset. But because the U.S. market is still where the super majority of the visitors originate, it's still overpowering, the improvement that we're seeing in the non-U.S. markets. And there's also a bit of a drag in the non-Canadian portion of international travel, where the numbers are slightly lower for 2024 year to date. And there's some suggestion that it might also relate to the fact that those markets depend on the U.S. being the hub, so to speak, of travel that eventually makes it to the Bahamas.
Are you able to estimate what that looks like?
Well, the numbers are in the data that the Ministry of Tourism has published, so we can always go back if necessary and quote. Yeah.
And you mentioned inflation as well. Is there anything we can do as a country to try to combat what we're seeing with the possibility of a rise in inflation in terms of, I know you mentioned energy costs going down, but there are other aspects like living, renting, housing, food, and stuff like that. Is there anything we can do from a local's perspective to try to combat a rise in inflation?
Well, it is expected that insofar as the inflation outcome is concerned, some of the ways that we will try to adapt in the Bahamas is the extent to which we can manage goods and services that are not originating from the United States. Because some of the inflation that the Bahamas is expected to experience is really because we may be importing goods and services from the United States that are impacted by tariff adjustments in the US. And so when we have the conversations about the Bahamas being able to have more direct imports of goods and services from other countries, that's really recognizing that if you do that, you're less exposed to the price variations that may be impacting the US consumer markets and by extension, the Bahamian consumer market. But you can do some of that in the short term, but that is really a conversation about, what sort of changes you can make medium and longer term in terms of the trade patterns that the Bahamas might experience and enjoy.
Can you say how work is going on the basic bank account and I guess a timeline we can look forward to the implementation?
Well, the basic bank account, we also closed public consultation on it the end of October. We anticipate that over the remainder of the year, the central bank will be working internally to scope out what regulations look like around basic bank accounts. We expect that we should be able to have that framework implemented as we progress through the first quarter of 2026.
I know you had mentioned with the credit bureau that you guys now, we can say we're seeing results with the faster processing of applications and such. But you did mention that there's a reduction in the mortgage applications. Why do you think that is?
We don't want to read too much into it because it's just one year or the other. But in general, some of the issues that relate to mortgages also reflect on the characteristics of mortgage applicants in the sense that it's anecdotally observed that the job contract that is being structured in many cases for new hires, in many cases, don't have the same sort of permanence, certainty to them as in the past. And so even to the extent that we are seeing the employment improvement, if those aren't the equivalent of permanent and pensionable type employment, then it is harder for those types of hired persons to get the long-term mortgage arrangement. So in many cases, banks are looking at whether the employment relationship comes across explicitly as being permanent or just a fixed-term contract. And so some of the conversations around housing and the mortgage market also has to do with how we transform more the nature of these new employment contracts and relationships.
That was part of my question because I know you guys had reduced the indemnity insurance requirement. I was wondering if that had any impact or any positive impact.
The mortgage indemnity, removal of the mortgage indemnity insurance requirement would have had some positive impact, but one has to appreciate that a lot of these reforms, you're going to see the accumulative impact over a medium and longer term. So one shouldn't expect that year to year or over a 12-month period that you're going to see in every case, the uptick. But the bottom line for it is that it does mean that as banks are assessing individuals for mortgage affordability, they're able to say that if you're not paying the indemnity insurance, that shifts a little bit more of your monthly resources towards, making payments on the principal and interest for the mortgage. So that's a plus.
The hotel room capacity, how concerning is that going forward when you talk about arrival numbers, stopover arrival numbers being down a bit? But you did note that the Airbnb segment seems to be holding strong. How do you strike the balance there?
Well, in terms of looking at the hotel sector versus the vacation rental, what has been quite interesting in the Bahamas is that the year over year, the number of new listings for vacation rental has been steadily increasing. And so that's also sustaining some of the growth that we're seeing. In the hotel sector, we haven't seen any noticeable change in terms of the the volume of rooms that are available. And therefore, to some extent, the product mix, whether it's luxury, mid-price, or budget price facilities, that combination does determine, how things will look in terms of the bookings and the travel that's coming into the destination. So, to some extent, we would have seen, some capacity returned to the downtown area. That's a different market. We've seen some rooms taken out of capacity on the Cable Beach Strip, and we're a few years away from some of those being restored. And we know that in the case of Paradise Island, some of the capacity is not there present, or not in use presently, aside from the seasonality in terms of how the major resorts might close down certain wings. The bottom line is that in your peak season, you still don't have some of the rooms available. So collectively, it does impact, how you can market and manage the sector. Did that answer the question? Yeah. All right. I think we had a very energetic session, or certainly a lot of questions today.